Good afternoon, everyone. Thanks for joining on this Thursday afternoon. And as usual, again this week on Thursday at 12 p.m. CST, we are here to share a topic on a specific topic about taxes and finances. Today we are going to talk about tax smart three tax smart strategies which shall reduce our tax liability. So today with me, our tax director Abhishek is also joining. So today I would like to start the first one with 401k, traditional IRA or traditional 401k. So today whatever money we earn, we have to pay on average 30 to 50% in taxes to IRS every dollar we earn. So and at the same time, IRS is also giving few opportunities where you can reduce our tax liability or save it for your future. One second, we are having some connection issues, I believe. Yeah. So the IRS is offering a few tax saving strategies which can reduce our tax liability. At the same time, you can save money for your future, for your retirement planning. So the traditional IRA, the traditional 401k, let's talk about traditional 401k. So if you are working on W2, your employer might be offering you a 401k where you can start contributing money for your retirement planning. So every year you can contribute up to $23,000 in this retirement contribution, and literally you are saving 30, 40, 50% in taxes at the federal and also at the state level. You can save taxes on this contribution. And this money can be used, can be withdrawn after 59 and a half years. This money can be withdrawn after 59 and a half years of your age, and at that time you need to pay taxes, so including on your original contributions and also on your earnings withdrawals. So this is what about traditional IRA, traditional 401k. And if employer is doing any matching, we strongly recommend you to don't miss this great opportunity, which is if your employer is doing any 3%, 4%, 5% matching, that is a free money for you. Some IRS, your employer is putting money in your pocket on top of your regular salary. So please don't ever miss this free matching from your employer. On top of that, you can contribute up to $23,000 per year for your 401k account. That's what. Today, Abhishek is also there. Abhishek also joined. Abhishek is a CPA and he is our tax director of AZ FinTax.
Hi, everyone. Hello.
Yeah. Abhishek, can you share your screen?
Yeah, I can share my screen with the.
And coming to after 401k, I also would like to talk about IRA, traditional IRA account. We can contribute up to $7,000 every year into this IRA, traditional IRA account, and this is a non-employer sponsored plan. It means it is not connected with your employment. You can open this account anywhere online, maybe with Fidelity or Vanguard or TD Ameritrade. You can open your online account and you can start contributing. There are some income threshold limits to enjoy the tax benefits. So if your incomes are within the income threshold limits, then you enjoy the tax deductions. If not, you will not get the tax deductions on your contributions. And Abhishek, can you go to the second slide? And on top of that, we can apart from your regular savings, the money grows tax deferred growth in your IRA contributions or your 401k. These money can be invested into your stock market or mutual funds, and money goes tax deferred growth. That means you don't need to pay taxes year on year on this growth. But whenever you withdraw this money in the future, you have to pay taxes on their withdrawals. Yeah. Abhishek, you can take over the second one and you can talk.
Yeah. So as Anil mentioned that these contributions are not just about saving for retirement. They are also about reducing your taxable income. That is the main idea behind this investment, and that is why this tool is very, very powerful. So uh, and there are definitely limits that is set by IRA, set by IRS. So that is for traditional IRA it is $7,000 in 2024, and for 401k it is $23,000. That is very important. We cannot pass this limit, but people who are aged over 50, they can contribute $1,000 more in IRA and $7,500 more in 401k. So in 2024, for people who age 50 or more, they can contribute $30,500, and for IRA they can contribute up to $8,000. So that's the great opportunity to boost your retirement saving as you get closer to retirement age. So friends, for any reason, if you may feel that you did not contributed enough in your prior years, or for any other reason, then this is the opportunity. You can contribute now and you can catch up your investment. Now,
Yeah.
as Anil said again, that about the tax benefit of the contribution is this main key advantages of this retirement account is that your contribution are typically tax deductible. So in other words, it is before tax money. This means that you can lower your taxable income for the year in which you make this contribution. So let's say if you are in 20% tax bracket and contribute $7,000 to IRS, to traditional IRA. So now you could reduce your tax bill by $1,400. This is the immediate tax savings. So that is what we were trying to explain, that this is really a powerful tool. Use it. Now let's go further. It is not just about saving taxes today only, but it will help you with long-term tax savings, because this retirement accounts offer the bit of tax deferred growth, as just Anil explained. Uh,
Thank you.
any,
Thank you,
yeah.
Abhishek. I will go to the next slide. I will take it.
Okay. So the next we will talk about few other things, which is HSA and charitable contribution. Anil will explain it in detail.
Yeah.
Yes, Anil, please go ahead.
Thank you. So regarding health savings account, so health savings account is a high is an again one of the tax saving tool which we can use to build our retirement funds at the same time, apart from our building our health saving funds. So HSA account, you can open this account whenever you have high deductible health plan, medical plan with you. So if you have a HDHP plan, you can open this HSA account, health savings account, and you can contribute up to $8,300 for your family towards this HSA account. And you can enjoy the tax savings on this health save $8,300. And this money can be used for any qualified medical expenses at any time, not only this year, even in the future. If you are not using this money by end of this year, it is absolutely okay, because the money can be rolled over, the funds can be rolled over to the future years, and the money can be used either for the medical or dental or vision related qualified medical expenses. And on top of that, you can also invest this money into the stock market. So rather than using this contributed money every year for your medical expenses, we also recommend you to consider investing in your mutual funds or stock market. So the money can grow tax free till retirement, tax free in the future. And in the future, whenever and the entire money has to be used only for your qualified medical expenses, maybe now or maybe after 20 years or maybe after even 30-40 years also. If you are not able to use this money for your medical expenses, then you can withdraw this money after 59.5 years, but you have to pay taxes on your withdrawal. I hope you are clear on HSA account, health savings account. It has triple advantage. When you contribute the money, you enjoy the tax deductions, and the money can be invested in the stock market. You can enjoy the tax-free growth. And number three, you can withdraw this money for any qualified medical expenses for tax-free. This is one of the great tax planning tool to build your health funds for your future. And the third one for today, we have is charitable contributions. Again, IRS encouraging all the taxpayers to contribute something for your for your charitable activities. So for the year 2024, you can get a tax deduction of up to 60% of your adjusted gross income, adjusted gross income. And the money whatever you are contributing, you enjoy the tax deductions. The contributions can be either in the cash, or it can be even non-cash assets also. You can even donate your old car, you can donate your clothes, you can donate any item, physical assets also, or stock market stocks also. If you are doing any non-cash assets contribution, the limit for the year is 30% of your adjusted gross income. Example, if your income level, your adjusted gross income is $300,000. So 30% is $90,000. Up to $90,000 you can do non-cash assets charitable contributions also you can do. And very, very important point, you to enjoy the charitable deductions, you need to file your tax returns under itemized tax return only. If it is a standard tax return, I hope you are familiar with what is a standard tax return or what is an itemized tax return. We did cover in our previous presentations, in our previous weekly presentations. But if you are filing an itemized, then only you can enjoy these charitable contributions. Otherwise, you won't be able to enjoy these charitable contribution tax deductions. So, in the conclusion, I would like to say there are total 3 tools which we should consider to as a tax smart investments. Number 1, retirement contributions, that is IRA and 401k. And number second one, health savings account. And the third one is charitable contributions. You are investing, and you are also at the same time you are enjoying the tax deductions. And for the charitable deductions, we had detailed conversations earlier in our previous weekly seminars on itemized deductions. At that time we did also cover in detail. Yeah. And that's it from my side about the 3 tax smart investment strategies. And if you have any questions, feel free to post your questions. We are happy to answer. And if if you are watching this recorded video later, then still you can feel free to post your questions in the chat box. Either it can be on the Facebook or Instagram or LinkedIn or our YouTube channel also. We are happy to answer all your questions in the chat, in the comment section. So right now I have a question here I would like to talk about. Can we take this year's non-deductible IRA contributions into the following years? Okay. Answer is no. I hope you are talking about your question is about about time limits. We are already done with our IRA contributions time limit. If you have any if you already did any contributions for the year last year, for the previous year 2023, if you have done any contributions, this money can be used for your future investment strategies. But the limits, the deadlines cannot be extended. The deadline to contribute to 2023 IRA contributions was already over by April 15th of 2024. So now you don't have time for the 2023 contributions. Yeah. Abhishek, can you go to the next slide? Abhishek? Yeah. If anyone has any questions, you can post your questions. And Abhishek, you can stop your screen sharing. Yes. I don't see any questions. Do you see any? Oh yeah, I think okay. Yeah, I do also see some more questions. Are you able to contribute to both 401k and IRA? Prerna, answer is yes. You can contribute to the both. You can contribute 401k with your employer. At the same time, you can open your IRA account outside and you can contribute to IRA also. Please note, IRA has income threshold limits, but for traditional 401k, you don't have any income threshold limits. As long as you are meeting the criteria, you can enjoy the tax deductions in both the scenarios. So, and Prerna, your question about 30,000.
500.
Yeah, 30,500. Okay. So, yes, 30,500 is your contributions for the 2025. Okay. So, for the 2025, for the Abhishek, can you answer this question?
No, yeah, I will answer this question. So, Prerna, yes, your contribution for 2024 would be 1,500 if you are, excuse me, if you are 50 years or older. Otherwise, the contribution should be $23,000. And that $8,000 that you mentioned, that is for IRA. Again, if you are older than 50, age of 50 or older. Otherwise, the limit is $7,000.
Sure. Thank you. Thanks, Abhishek. And
of course,
can we take this year's non-deductible contribution into the following years? As I said, the deadline for the year 2023 was over, but for the 2024, you have time till April 15th of the next year. That is year 2025. Can an individual have both 401k and IRA accounts for a given year? Answer is yes, Gautam Reddy. Yes, you can have both the accounts. And Maharshi, other than HS and IRA, do we have any more tax saving tips? Okay, Maharshi, we have many tax saving tips, but these weekly sessions we want to limit to 15 minutes to the extent possible, so that we can have so that we can get the attention of we can retain the attention. There are many more tax saving tips are there, but please stay tuned for our future weekly sessions. And Srinivas, if you receive W2 and self-employed, can we do $23,000 plus 25% of profit into the SEP IRA? Okay, Srinivas, very good question. So Answer is yes. That is the beauty. If you are having a full-time employment, you can do your regular 401k $23,000 contribution, and you can open a SEP IRA contribution, a SEP IRA account through your self-employed business, and can do 25% of your W2 through the self-employment business. Yes, Srinivas, you can do both. That is why we always encourage everyone to start some side gig. It opens up the doors to have to enjoy many tax saving tools. And Kumari, can we do charitable if we are doing standard deduction? Answer is no, it is not beneficial. You can do charitable, but you will not enjoy any tax savings if you are doing standard deduction. Tax savings on your charitable contributions if you are doing any charities. So no. And simple answer, Kumari, answer is no.
Yeah, because charitable contribution itself is a part of itemized deduction. So you have to do the itemized deduction, then only it is you are allowed to take that benefit.
Yes. Okay. Any more questions? I'm happy to answer if you have any more questions, or otherwise, stay tuned for our next Thursday afternoon, 12 p.m. CST. We will come with some new topic. And yeah, I don't see any more. Yeah, Aram, there is one more question. Hi again. I was qualified to take only partial deduction from last year's IRA contributions. What happens with the remaining contributions from the last year? Aram, very good question. The balance contribution amount, whatever you are doing in the traditional IRA, you can roll it over to the Roth IRA, and you will not pay any taxes on this conversion because you are not enjoying any tax benefits. If you are enjoying any tax benefits, and if you are doing any Roth conversion either this year or in the future, you have to pay taxes. But in this scenario, Aram, because you are not enjoying all the tax benefits, the non-tax enjoyed amount can be rolled over to the Roth IRA, and you can enjoy the tax savings. This strategy is called backdoor Roth IRA, which we are going to cover in the next future weekly sessions. But this is a great strategy called backdoor Roth IRA that itself will take one complete session in one of the Thursdays live. We can do it. Thank you. I think that's it. And if you have any more questions, feel free to post your questions. You can send an email to support@azfintax.com, or you can come and post in any comments box at any time. In any of our live sessions, we are doing live now in YouTube, Facebook, LinkedIn, Instagram, and also Twitter. Okay, there is one more question from the Kumari. If the income limit is high for the traditional IRA, can we still do it after paying taxes? Answer is yes. Yes, Kumari, you can do the contributions to the traditional, but you will not enjoy the tax deductions on your because your incomes are high. But you can roll it over that money to the Roth. This is called backdoor Roth IRA, which we are going to cover it in the next slide, next sessions. Thank you. And Abhishek, do you have any closing comments? If you have, you can close.
Uh, yeah, we discussed some of the very powerful tool, and so everyone, I will request that everyone should take advantage of IRA and 401k at least. Sometimes we donate stuff from old clothes, old furniture, and something. So keep those receipts and take that advantage too, because sometimes the fair market value of things that we donate is like $2, $3, $4, $5,000, and you can save a few thousands in taxes. So that's what I would suggest. But this all are very powerful tools, so please use them. We enjoyed talking to you, so thank you so much. Please connect with us every Thursday, same time, 12 o'clock
Bye.
CST.